$2.07 billion in revenue, 35% year-over-year growth in the middle of the AI infrastructure arms race. Everyone is obsessed with chips, but very few people are paying attention to the silent giant making a fortune behind the scenes. This company has a profit statement that looks more like a top-tier software business, and is now leading an Ethernet army directly against NVIDIA's dominance in AI networking protocols. This wasn't just a flawless earnings report. It may have been the beginning of a new network power shift. Hey everyone, on Deep Dive Stock Earnings here. We don't just look at price moves, we break down the logic and trends behind them. If you want to truly understand how the market works, make sure to like and subscribe. Let's get right into it. In Q1, Arista generated $709 billion in revenue, up 35.1% year-over-year. And keep in mind, for a company already operating at this scale, delivering more than 35% organic growth is extremely impressive. What stood out even more was profitability. Adjusted EPS came in at 87 cents per share, even after the stock split. Earnings per share are still accelerating faster than Wall Street expected. That tells you this company still has massive growth momentum. 35% revenue growth is already impressive, but the real story is the quality of that growth. Arista isn't growing through price wars, it's growing because demand for high-end networking infrastructure is exploding. As AI infrastructure expands globally, Arista has basically become the exclusive contractor building the digital highways. This combination of revenue acceleration and profit expansion sets an incredibly bullish tone for the rest of fiscal 2026. For a hardware company, Arista's margins almost look unreal. A 47.8% operating margin, a 62.4% gross margin. Those numbers are nearly unheard of in networking hardware. The reason is Arista's IaaS operating system. The company isn't simply selling metal boxes, it's selling an intelligent software ecosystem deeply integrated with premium hardware. That gives Arista enormous pricing power, even when dealing with giants like Meta and Microsoft. A nearly 48% operating margin is insane. That basically means for every $2 of product sold, Arista keeps almost $1 in operating profit. Usually, only elite SaaS companies can achieve that kind of profitability, but Arista is doing it while selling switches and networking equipment. That tells you the company has already established a form of technological dominance in the high-end networking market. This earnings report also confirmed a major industry shift. AI workloads are increasingly moving away from NVIDIA's InfiniBand ecosystem and toward more scalable Ethernet-based architectures. Arista is using its dominance in Ethernet networking to capture massive market share inside AI clusters operated by companies like Meta and Microsoft. This is no longer just a protocol battle, it's a fight over the future control layer of AI infrastructure itself. This was honestly the most exciting part of the entire report for me. For years, everyone assumed AI networking belonged entirely to InfiniBand, but now Ethernet is making a serious comeback, and Arista is leading that movement as hyperscalers shift toward more open and scalable architectures. Arista is becoming the obvious choice. It's basically taking slices of the AI networking market directly back from NVIDIA's ecosystem. Arista's balance sheet looks like a fortress. In a single quarter, the company generated $1.69 billion in operating cash flow. Meanwhile, cash and marketable securities climbed to $12.02 billion, and perhaps most importantly, debt is almost non-existent. That kind of financial strength gives Arista extraordinary flexibility to reinvest aggressively into R, while maintaining a massive advantage during any market slowdown. Zero debt and $12.02 billion in cash. In today's high-rate environment, that's basically financial superpower status. Arista doesn't need permission from banks. It can aggressively expand, acquire technologies, or scale operations whenever it wants. This kind of anti-fragile balance sheet gives investors enormous confidence. Even if the macro environment gets ugly, Arista has enough financial strength to outperform almost everyone else. To solve the physical limitations inside AI data centers, Arista recently launched major innovations. Its new liquid-cooled optical systems can reduce networking rack requirements by as much as 75%, dramatically helping with power and space constraints. At the same time, the new 700 series spine switches are specifically designed for AI training workloads and help eliminate packet loss caused by network microbursts. That directly improves large model training efficiency. Arista is becoming indispensable by solving real-world infrastructure bottlenecks. Building AI infrastructure isn't just about algorithms anymore. It's about physics. Power consumption and physical space are now some of the biggest problems hyperscalers face. And Arista's solutions directly attack those bottlenecks. That's why the company can maintain such high margins. It's not just selling hardware, it's using engineering innovation to save customers money while improving performance at the same time. Beyond hyperscalers, Arista is also steadily taking market share away from legacy competitors like Cisco and enterprise campus networking and routing by bringing high-end AI networking technology into traditional enterprise markets. Arista is successfully diversifying its customer base that reduces dependence on a small group of cloud giants and creates a much more stable long-term growth curve. Cisco's loss is becoming Arista's gain. Arista used to be known mainly as the networking supplier for cloud giants, but now it's entering enterprise markets with significantly better technology, and honestly, most traditional competitors simply can't keep up. This diversification strategy proves Arista can dominate both the highest-end AI infrastructure market and the broader enterprise market at the same time. That dramatically raises the company's long-term ceiling. As AI clusters scale from 30,000 PS toward 100,000 PS and beyond, existing 800Gs networking infrastructure is starting to hit its limits. Arista now sits at the beginning of a multi-year transition from 800Gs to 1.6T Ethernet. This isn't just another hardware refresh cycle. It's a complete architectural rebuild across the industry. And as long as AI demand keeps growing, Arista's addressable market may continue expanding for years. One thing investors need to understand is that network upgrades are basically irreversible. As AI models evolve, bandwidth demand only keeps increasing. The move into the 1.6T era means Arista's value per deployment could rise significantly from here. What we're seeing today may only be the opening chapter of a massive multi-year infrastructure cycle. And for companies with clear technological roadmaps like Arista, time becomes their biggest advantage. Now, Arista isn't completely perfect. Its biggest weakness right now is valuation. The stock is clearly trading at a premium multiple, but considering its dominance in AI networking infrastructure and its elite financial performance, Arista still remains one of the highest quality, long-term AI investments in the market. In Wall Street, expensive often becomes synonymous with exceptional quality. At the end of the day, Arista Networks is basically the company selling shovels during the AI gold rush, except it somehow turned those shovels into luxury products. It's not just making money, it's gaining influence over the future architecture of AI networking itself. So what do you think? Do you believe Arista can continue taking market share through Ethernet and challenge NVIDIA's networking dominance? Or do you think the valuation has already become too expensive? That's it for today's video. This is Deep Dive Stock Earnings, and I'll see you in the next one.